2nd November, Wednesday. Kel is back. Now, iPhone 14 workers flee. Oh my god, this is really incredible. Of course, the thing is what happened. I think you have probably saw the news right now. But is that going to affect iPhone? Would it affect this Apple? We don't know. But I'll show you some clips that you probably can see in the mainstream media. And of course, tonight is the FOMC meeting. They already started day 1, so day 2 is tonight, and they will likely be telling us what to expect, and there are some important charts for you to take note. And of course, don't forget, remember, I have this code that I slip in the PowerPoint slide. Look out for it and key the command box, okay? Alright, let's go. Now, the thing is this, please make sure that tonight is FOMC night, so it's going to be a very volatile night, usually at 2:30 a.m. when the Jerome Powell coming to speak. It will get very volatile, so go slow in your trading. If not, consider to do it tomorrow. Alright, and once again, thank you Ames for the kind sponsorship. Now, oh my god, okay, this is what's happening right now. Because of fearing of COVID, workers flee from Foxconn vast Chinese iPhone plant. Now, it's really incredible. They are running away, and they don't care about the money because they don't want to be kept. Because the thing is that the what is happening inside the factory itself, which we can see in a very short while, is crazy. All right, it's complete madness. I'm gonna show you right now. But once again, it's right. All these online information. Hope that you do your own research. Okay, let me just bring you one YouTuber that I've been following a little bit. And let's see what it has to say. Now, because it's in Chinese, so I kept the thing down. But to show you the video clips of all this, you can see very clearly that these are the people are trying to get out of it. And in the middle of the night, they just couldn't take it anymore. It breaks down. And people just want to run away, okay? Now, why? Because apparently the food is very little, the basic necessity wasn't there, and of course, the thing is this, as there's some saying that some people will bring those turn positive in their COVID, right? They're brought away, and after that, they came back in again. So it's like, what the hell? So there's a lot of unconfirmed rumors ongoing, but definitely people are getting very upset, okay? Getting very upset, and so they have decided that, you know what? Rather than stay here itself, let's get out of this place. So people just scaled up the walls, the fence, and they just walk home, okay? Walk home. Some of them walk like 20 to 30 miles. You can see that on the top right corner, they are really doing this, jumping across and getting out itself and trying to say that let's get back home. Okay, this is actually all over on the Chinese media. But of course, you can see that some of the people are so exhausted, they couldn't take it anymore. They'd rather do this, okay? So they're all running away. And of course, would that affect this iPhone production? Seriously, I won't know. But definitely it's something that is not very nice, okay? So guys, if you want to watch out more, you can go to different sources to take a look. But again, this is very sad to see all this happening right now. Yep, okay. Okay, so with this on moving, let's just stop the video here. And let's continue on the PowerPoint. Let's go. Oops, sorry, there's some error. Okay, all right. So tonight is FOMC meeting. Okay, so obviously it's our Jerome Powell really need to put his position, and everybody's watching it. We all know that people are saying that the Fed may pivot, but to me, I've been standing ground. I say no, they will not pivot, but likely they may give hint or drop hint to say that they may slow down. Okay, there's a bit of pivoting, but it's not exactly pivot. Okay, so 75 basis point is tonight. I believe that will bring the market down a little bit. Then after that, Jerome Powell most likely will come back in and say, you know what, yeah, we are looking at that to a lower rate. And because they are looking at 4.5%, right, for this year, so likely that will bring the market up. And of course, let's look at the past. You can see that almost every time during the FOMC meeting, majority of the time, the post FOMC meeting or during FOMC meeting, the market will go up, okay, most of the time. So take note of this very important factor. But then again, all right, but the aftermath of the FOMC meeting, because of the interest rate hiking along the last few months, definitely the market overall is on a downward trend. So my point is this: if you're going to trade on tonight's market, then do expect volatility to happen. But you're trading for a longer term itself, you must understand by increasing interest rate is going to affect business. And for business who are affected by COVID or the current inflation, and now with the increasing of interest rates, definitely some business can't take it. Okay, so there will be financial calamity in certain companies or industry, and definitely some of them will get casualty. They'll be the one of them to be sacrificed, and of course they will bring the market down a little bit. Okay, all right. So that's the reason why I want you to study some charts with me now and see whether can you see what I'm seeing in the market. So let's go right now. Okay, so let's go to the charts right in, and let me explain to you more in details. Give me a while on this. Okay, let me escape this screen. Okay, let's go. Now, first thing first, we only need to watch the chart today here. Okay, this is very important, guys. Now, you can see that this is the moving average MA200 on the Dow Jones spot market. So every time we can see since March, right, every time it will actually recovers a little bit, and then after that, the sell right pulls back. Okay, I'm going to draw it with some tools right now. Just give me a moment. Okay, so we have this particular movement whereby the market went above the MA200 first, then after that we see a bit of doji and then some selling. All right, that's the first wave. The second one was something similar. It again went above the MA200, and basically it went even higher than the previous high, which is like making people believe that the market will go higher, right? But immediately it's right, the selling came in, and of course that drags the market down. Okay, that was what happened in March to April and May. Okay, then very interesting, it happened again right here. That was back in middle of August period, whereby we see the similar thing happen, where the market breaks above the MA200 first very strongly, then it followed by a couple of dojis in this case. Okay, can you see that? And of course, once the market goes below the MA200, wow, the selling came in. And of course, that was also post the last FOMC meeting. Okay, so now, ladies and gentlemen, this is going to be crucial. Watch this now. We have a strong build up above the MA200, as you can see. We have the doji that is similar previously, and we have a very interesting closing yesterday. The closing is perfect. The closing was exactly above the MA200, okay, slightly above. It went below it for one moment, but then it closed above it. So this is going to be a very, in my opinion, it's going to be a big one. That means that we're going to see either, okay, a big rally that's going to go up here all the way, and that will take away 34,000, okay, that will likely take down 34,000. If not, okay, if not, then the selling will come down all the way, and that will bring down to 28,000. So my target is that 34,000 is the upside potential that the Dow can go, versus the potential downside the Dow can also go, that is 28,000. Now, of course, this is a very huge difference, because why? The current price now for the Dow Jones is at 32,653. So upside potential is about 1,400 points. The downside potential can be as much as almost like 5,000 points. So of course, some people will say that this is ridiculous forecast, but if you look carefully, again, the last time we see the RSI at this setting marker itself, the Dow Jones really did come down that much. Okay, so this is something that you must understand, that it can happen. Yeah, this is something crucial and important. Okay, let me just just clear my screen. Okay, and let's just look at another chart, and that's where it gets very interesting. Now, this is the S&P 500 chart right now. So it's very clear that the S&P 500 is now trading below the MA200. And of course, the last time we saw this, the market in this April period touch the MA200 and pull back. Okay, now watch this carefully. I want you to take note of this. Yeah, the highest point is over here, the lowest point is over here back then. Okay, why I didn't use the lowest level now? Wait a minute, just let me explain this. So we take the highest point and the lowest point, we do a Fibonacci. You notice that this 23.6 is a very critical level. The market just rebounded there, stopped there, pulls back, stopped there, pulls back. But once it crossed above it, right, the 23.6, the market much higher. And when it pulled back, it came back down and stopped here perfectly. Can you see that right now? And then after that, went all the way to the MA200. And very incredible. Once it hit the MA200, the market just pulled back down. So you can see that the power of the MA200 and the Fibonacci now. Okay, got the idea now? Very good. Now, let me extend this for you, and you see my reason for doing all this. Okay, this is going to be a powerful charting session. You will love it, guys. Okay, so let's take a look right now. If I put it to the latest low, okay, which is here, you can see that what we can see is incredible. The market, when it rebounded, right, it went up to this 23.6, recover and stop here. Can you see right now? It's actually stopped right here. So this 23.6 is a very powerful figure. So if you look at it right now, if the market continue to do what it has done previously, it will go up to the 38.2. That's 4,000 points for the S&P 500. So there's ongoing rumors say the S&P 500 can go back to 4,000 points, and that is probably the reason why. But the thing is that a lot of them are also saying that if the market go to 4,000 points, that would be a very justified sell. Okay, I just leave it there. But if you look carefully, if you bring it up all the way to hit the MA 200 level, which is here, that'll be about 4,100 level. Okay, so if someone tell me, say, okay, I want to have a sure win sell short level, then it'll be 4,100. Okay, but if you say I want to sell something that's nearer because I don't think go to 4,100, then it'll be 4,000 level. Okay, now for me itself, right, I don't like the movement because you can see the volume is declining. So I'm going to tell you this, guys, 3807 or 3808 is a very critical level for the S&P 500 on the spot market. If the market goes below 3808, then the selling will come back down again, and that should bring a new low. But if the S&P 500 stays above and goes up, then the first target will be 4,000 points. So you can see the point now, very important. So we've seen the power of MA 200. We saw the Fibonacci. I want to bring to the next chart, which is the NASDAQ. Now you can see on the NASDAQ, right, if the RSI side by side, and we actually, look at this right now, you can see that the NASDAQ from the lowest point, when it was 6,700 points, all the way we stretched to the highest point, which go to 16,000. The NASDAQ has pulled back down, and it went to the 61.8 level. Now you can see that we are very near to the 50% mark, is 11,780. Okay, so the upside potential is high. But just take note, this 61 point has become a very powerful form of support. You can see right now, I'm getting bigger for you. You can see the support itself is incredible because the market actually gaps down first and it pump up all the way. Okay, so I want to take a look at this. This one here itself, we call it as a BMB. And if you look at it right now, the distance between here and here, if you multiply by 2, we get somewhere around here. And that's why the market went up. Okay, so the thing is this, I'm trying to explain here, is that if the market really pulls back because of the increasing the interest rates and stuff like that and any factor, now watch out for these guys, because if the market really pulls below the 61.8, the next flush point is crazy, because the next level the market can go down all the way to the 9,000 point mark. Now this is scary, because if the NASDAQ really breaks below the 61.8 and goes below the 10,600 point mark, it's going to be a free pathway down all the way to this point, and that's 8,900. Now that will really break the market, that will kill the market, and that just cannot be imagined. But of course, if you remember, I just said about the Dow Jones, if the Dow Jones do come down to 28,000, it is very possible for the NASDAQ to follow through, and that's the reason why I'm actually having both side view. So upside potential is 11,780. Downside view, if you cannot hold this 10,600 marker, then 9,000 is really possible. And of course, if you look at this chart which I shared yesterday, I think, or day before, regarding about this, the JNK. Now some people text me on the side and say, what's JNK again? He explained more in detail. So what I did for you is a Google search. Is okay, key JNK on Google. It's actually called the SPDR Bloomberg High Yield Bond ETFs. Okay, to be more detailed itself, it tracks a market-weighted index of high liquid, high-yield US dollar-denominated corporate bonds. So in short, this is a very important indicator or an index whereby it will give you a pre-sight or a pre-hand information of the market. So let's just take a look here, right here. This is where the high was on the JNK. If you look at it on the 12th of August, my birthday. Now you notice that on the 12th of August, on that day, the JNK actually has peaked, right? But if you notice that the Dow Jones actually went up a few days higher, right? Can you see over here? The Dow Jones actually went up a few more days. So that actually gives you a lot of information beforehand itself. Okay. Then if you look at it again, it peaked right here recently. That was back on the 27th of May, and you notice that the market went sideways for at least 7 days before the cascading sell-off. Okay, and it repeats back again over here on the 29th of March, and the same thing happened. So what I'm trying to say is this: we have a little bit of pullback right now on the 20th of October, but incredibly after that itself, right, the market is going sideways. So now the MA 200, as I mentioned earlier, has given you a bit of insight, right? And now with the JNK coming down a little bit, I just cannot deny that this could be a very big turning point. So if the market failed to stay above the MA 200, okay, there is a possibility for the market to go down to 28,000. And of course, For the S&P 500, 3808 will be very critical support on the cash market. And for the NASDAQ, this 10,600 mark must stay support. If not, the next number can be a calamity number. So all this information is all the conventional chart that I want to share with you today. And remember, because today is the FOMC meeting, likely the market will be sideways until then itself. So go slow in your trading. If you really want to trade, then it's like after 2:30, the news announcement, then you see whether we can see the usual style whereby Jerome Powell come and speak, the market just recover. All right, I will know. So guys, hope you like this video. And remember, the code is somewhere in the PowerPoint. Key the code into the comment box and stand a chance to have a lunch with me next week. This is Kel signing off. Have a great day. Bye-bye.